The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 877-927-6648. And today is November the 21st, day before Thanksgiving. My pleasure to be here. We will not be here on Friday. So have yourselves a wonderful Thanksgiving. You know, one of my favorite holidays. Just the only pressure is to eat and have fun. Or maybe not eat and have fun. So hope you all enjoy yourselves, and we'll see what the market does on Friday, that quiet half-day session Friday. Meantime, I want to wish everyone at TFNN just a wonderful Thanksgiving, and thanks for all you do here, and to the listeners as well, all of you out there. And certainly, this is a time for circumspect reflection to say, what's gone right, probably hasn't gone right, and just what you're thankful for. So, with that, let's go straight to the market and say, the Dow is up 24 at 12,812. The S&P is down $1 at 13.86. The comp index is unched at 29.16. Gold is up almost $4 at 17.27. Silver's up 12 cents at 33. You've got high-grade copper now down sharply, down 30 at 3.48. Getting down below the 340 is going to be a big issue. Crude oil is at 87.50, but we've got bonds down 30 seconds at 150.04. I'll talk about those things as we move along, I'm sure. And I just want to show something here. When you're looking at techniques, I came across a particular technique, just trial and error, and eventually I don't go looking for techniques. They pop out at me. They say, you know what, a certain something has worked 7 out of 10 times. I actually prefer it even to be higher than that. Therefore, if it continues to do that over a period of time, and you test it out, either by buying or selling or whatever it is, or as recommendations, but you followed it intensely and it succeeded, there's a real good chance that you could include it as part of a technique. So under the umbrella of the ChapmanWave, and basically the ChapmanWave essentially is going from the buy signal to each successively higher peak, looking at the lowest trough and expecting a peak D to occur. And thank you, folks in the den. I thank you for your wishes. I just saw that. And back at you, I hope that you all have just a wonderful Thanksgiving. When you're looking at a technique that is very simple at its core, then you say to yourself, well, historically, when you go back, how many times has this been discussed in the vernacular? In other words, out there, who else has noticed this? Well, I've mentioned many times that I've had Stocks and Commodities magazine. I've been getting it, I don't even know how long, maybe 15 years. All I know is that I keep throwing out the old ones, and there seem to be more and more. And up until this point, and someone can correct me if I'm wrong, I have never seen a technique that essentially grades each successively higher peak. I've never seen a technique that identifies the low bar and then merely counts each successively higher peak and labels it. In my case, I didn't want to go 1, 2, 3, 4. I wanted to call it peak A. It is a leg as it moves up until it makes a peak, and then it's called a peak. Then it pulls back, and then it just needs to go 1 penny above the left side high bar of A, and that starts leg B. That's not to say that leg B is going to reverse 1 penny above. It just says officially in the technique, at B, you should start to see the technicals improve. That is, in my case, the MACD and the stochastic, or the 9-period exponential moving average. Or it's the left side, right side price time match, where you're starting to move like a V-shaped pattern, as we've seen here in the Dow, where the left side is matching the right side. And as soon as it goes to a certain level, it goes from a buy signal, and I teach this in great detail, how you can go from a buy signal to a buy mode. What does the buy mode imply? It implies that there's a really good chance that this particular tradable, or whatever it is that you're looking at, will go to a leg D. At that point, historically, that's where there's the greatest vulnerability. Does it have to be vulnerable? No. But that's where, it's like you're on the highway, right? And ahead you suddenly see a red light, and you think, uh-oh, I better slow down. Doesn't mean that there's going to be a crash. Doesn't mean that all the cars are going to just suddenly stop. Chances are not. But that's where, like a yellow light goes on, although it's a red light, a yellow light goes on and says, just be careful. Why? Because within the technique that I discovered, there is something that is very important. And that says that as you're moving higher, if you go very quickly above peak D, other things can occur. That's what I call the parallel wave count. But at D, that's where you've got to be a little bit careful. Now look at this. The 120-minute chart, if you're looking at my charts on Tiger TV or tiger.mobi, the low bar that was made at 12.471 went to leg A, then peak A. B, peak C, and then went to leg D. And at leg D, what happens is you're at 12,830.96. That's the high so far today. And that is the 120-minute bar. And that particular 120-minute bar says, okay, where are you looking to the left side? Where are you in terms of the structure? Where are you in terms of, if I was to do a left side, right side price time match, what has happened? Well, it says right at this particular point, there could be a momentary hesitation. And that hesitation says, it's not negative yet, but if there is a pullback and the Dow comes back to 12,760 to 12,740, then you've got to be somewhat careful, because the most recent lows of 12,000, let's call it 12,700, that could be well tested. Now, something very exciting could happen. If, in fact, the price starts to move much sharper, that means all of a sudden that trend line that you're looking at, and that trend line right now is coming in at 12,954. It says that trend line could become a magnet if every time there's a price that pulls back, suddenly sees a rally attempt that succeeds. Why? Because it says with the volatility index, this is the bottom chart that you're looking at here, if you're looking at Tiger TV, it says that that volatility index, which is at 14.91, it hit 1477. It says that is in trough, or leg G/C. And it's getting very, very close to an area where, at other times, there's been a bounce. But having gone this low, and looking back historically, let me just grab this chart here before I do anything else, there's a chance that the 1367 low that was made back on the 5th of October might be achieved. There's even a lower low, which is the 1351 low back on the 14th of September, that would become a support level. But it could also mean that we're getting to an area right here where you've got to be a little bit careful. Why? Because it's still leg A up, single leg A up in the daily chart, single leg A up in the Dow daily and the S&P daily, and I believe in the Qs. And two things you've got to keep in mind. One is a powerful single leg up that goes on for 3 successive sessions means that there is a chance, if you look back at chart formations, the previous chart formations, there is a chance that you are now in the same kind of area that you were back at the June 4th. Was it June 4th? Yeah, the June 4th low, and turning around, and this could be the start of a much bigger move. That's how you're going from the 120-minute chart to the daily chart. 120-minute chart says a little bit of caution right now. The daily chart says, if this was to be a single leg A up and then a failure pattern, the failure should come in later this afternoon on the third or fourth day and go into the fifth day, and that move down should in fact take you to at least a third below the high that was made from the start of in the Dow's case. It was 12,471. The S&P was a 1343s. So I told subscribers this morning in my opening call, very comprehensive look at the markets, and we've taken quite a number of profits, quite a number of stocks. We've taken profits as they've bounced back to the levels that I said, okay, if they hit that level, we're going to go out, take our profits, and we will come back in at another point because they potentially look like the weekly charts and monthly charts might be turning down for a more serious pullback. At the same time, I'm not afraid. We had two buys on this morning. I haven't had a chance to check whether or not we had got either of them because I had some things that I had to do earlier on. But they are stocks that are looking quite good. And it says that if the market itself is going to be going much higher, then what is really important is that the volatility index stays low, that the sector that is normally the defensive sector, like the bonds and fixed income area, you want to see those things slide. You want to see the TLT. Oh, I just need to do this. I'm going to break for a second because I've got a chart here of Deere. I love the action in Deere just recently. And then as I looked at it, I said, you know what? I know this chart pattern. I know it really well. I do not want any part of Deere. They must have had earnings or something come out. And the reason why when I did my analysis, I did a left side, right side price time match. And these are the techniques that I teach in my course, the 6th and 7th of December, all day. Believe me, folks, when I tell you that you will never, ever look at a chart the same way again if you do this course. Why? Because you learn to decipher the code that's in there. That's just not going to tell you whether you're going to trade it perfectly or not, but you want to know where you are. You want to know what's the possibility. There are two separate things. How do you enter? What do you do? We've missed 3 trades this week just by a few cents in one of the cases, and they had a fantastic 20%, 25% gain or more. That's okay. That's, it's not okay. It's upsetting. But that's part of the discipline because other things have worked out. Now, when I looked at Deere, I said, okay, there's a left side, right side price time match that takes us to, and Deere was at about 86 to 87 at the time. DE is a symbol. And I looked at it and I said, you know what? I'm going to do this. I've got a price time match that says on the 23rd, round about the 23rd of November, Deere could very well be in the 80.54 to 80.30 area. What's it today? The low was 82.06. So these are the techniques that I will teach you. And it's really important that you learn how to do these things. I'll be right back. Basil Chapman, 877-9276.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back. This is the Tiger Editions Hour, the Wednesday edition to Tuesday. Speaking about Tuesday, I just about a couple of weeks ago, I was walking along just in my neighborhood, taking a walk, and I bumped into a guy who was working out in his yard, in the front part of his house, and I was chatting with him. Turns out that that's the house that the guy who wrote the book Tuesdays with Maury, he had lived in. And this guy had bought it from him, or the estate. I think that he had died. Bought it from him, the guy who wrote the book. I said, wow, that's interesting. He was telling me about it. So we've got a caller online. We've got Dave in Boston. Hi, Dave. How are you?
Basil, happy Thanksgiving. How are you today?
I'm well. How are you?
Very good, sir. Thank you. Hey, I want to get your take on Bank of America. It appears the stock has been fairly strong, and I'm in it for a trade, short term. I'm looking to sell it either tomorrow, Friday, Monday, or Tuesday. But I'm wondering if you see maybe some more upside, short term, or should I take my profits today?
Where did you get in? That's the question.
Let's see. I got in right around $9.40. So I pretty much day trade this. I'm in and out, but I bought it around $9.40. $9.45 exactly, and then
okay. Yes, I'm going to ask you this. You don't have to tell me. Just think about this. If you bought enough to hold a position and to to take profits as well. In other words, to be able to split it up and you can figure out the proportion. Let me explain what I'm looking at. This was on my list as a potential buy, but there are a number of these stocks. And one of the reasons why I have a little hesitation in when you're talking short term is that this is what's called an high-level consolidation. Bank of America, BAC, is trading at $9.71, up 8 cents. It made a high with a doji candle on the 14th of September at $9.79. It pulled back to $8.70 on the 26th. Then what it did is it started going in a brand new. Now, these rectangle formations are fabulous. This is one of the things that I love to teach because it happens so often. If you can identify the potential for a rectangle formation, you can get in the ChapmanWave. Usually it's in a smaller time frame, but it can also work in the larger time frame. So in the daily time frame, this stock looks like it went like the rectangle formed, and it went from the doji low on the 26 at 870 to peak A, B, C, pulls back, holds the 9-period exponential moving average. If anyone's looking at Tiger TV, you'll see that red line, and then spikes above the 979 level to $9. No, wait a minute. It spikes above 979 to 997 all morning. I've been looking at this and I've been getting these tongue-tied. 997 double top. Doji candle pulls back but makes a higher high. So now it's done, makes a higher low. What it's done is it's made higher highs and higher lows. What's the prerequisite for an uptrend? Is exactly that. Now the question is it making a high level consolidation that says that $9.70 it's $9.90 area is going to be very, very strong resistance? Or is this a move that the weekly chart is saying, hey, stop fussing, hold the stock because the MACD is at 80%. The MACD is good and the stochastics at 80%. The weekly chart looks like it wants desperately to break into the 10s. You see what I'm saying? I'm saying to you, I would consider that you have a stop on part of your position if you're day trading. Let's call it a day trade, even though you've held it for a little longer. But I would not let it go under, say, $9.61 to $9.59 on part of your trade. But I'm also suggesting that part of your position, if you're able to, is to think differently and treat. You got to have a bifurcated mind right now. One part of your position has to say, this time I want to think a little bit more longer trend because $10.10 was a peak B back in earlier this year. It looks like it's making a cup and a double handle, which can be very positive if Bank of America suddenly breaks into the 1020s. So what I'm saying to you is maybe on the short term, you might be giving up some of your profit. But there is a much greater chance that the way the MACD is turning up in the daily and the stochastics at 40% and working quite nicely is that Bank of America is actually going to move higher. And that's what I'm thinking here. This rotational market could start to favor the banks as other sectors come under pressure. So two things. First of all, that would be the stop on part of my position on a short term. And the other would say, maybe sacrifice this time some of your profit because if $9.44, the 9-period exponential moving average holds, hey, I love this so much. I'm going to ask you to hold on, and if Paul in Boston is also holding on, this is an important stock. It's what I'm looking at. I'd like to talk out my analysis, and I'd like you, if you want to listen to it, then hold on.
I'll hold on. Thank you.
Thank you, Dave. We've got Dave holding on. We've got Paul holding on. Basil Chapman, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. Now, there's a question, and the question is, actually, someone had posed this question. What time frames, David, are you trading to be able to intraday trade or day trade?
Hello?
Hi.
Hi, I'm sorry.
What time frames are you looking at when you day trade?
Okay, I'm looking at the 10-minute chart, Basil.
Okay. All right. Now, there was a question that was posed, and I thought that was a good question. I just somehow took it for granted that you would be looking at the somehow the 10 or the 30-minute charts and that, yes. So,
yeah, it looks like it's basing right now on a bull flag, and I think I was planning to sell this at around 9.97 or 9.95 in that area, and I think we got a good shot to get there. And that was my question between Friday or Monday to hold it, because it looks like it's got a high base going in this little consolidation move.
Exactly right. And it's making the higher highs and higher lows, and that's really important. Now,
yes.
So the reason my question to you was, well, first of all, I wanted to make the statement. I don't want to change you're a successful trader. I don't want to change your thinking. I wanted to suggest to you that there is a chance that Bank of America, certainly as I was doing the 120-minute chart, could rally into next week, sometime maybe Tuesday or Wednesday. I've got Wednesday actually as a chance to get to the $9.97 level, by Tuesday or Wednesday of next week. That's the 120-minute chart. As long as it's holding the 9-period moving average and the 120-minute chart, that's 956. I would even say it really shouldn't go below 963. So that's the reason why I wanted to say that to you, that if you took something off, I would make a tighter stop and see if you can go further than that, because now you're moving into the daily chart, which is very important, because if the daily chart breaks above $10, breaks above, I'd say 10.05, 10.06, I'm now looking at it as possibly not just a leg E in the daily, but E/A, which means it could start another move to the upside. But that's where you know exactly you've got a well-defined risk, because you've taken profits at, say, that 997 area that you'd like to. And then what I would do is I would raise the stop on the other, but only because the chart pattern on the weekly says that it's actually looking very good. Although it's made a peak D, the way it's made the cup formation, the way it's refused to pull back under all the fiscal cliff talk, I kind of like it. So that's what I wanted to tell you, Dave. But congratulations so far. You're doing very nicely. And maybe we can talk again Monday and see how it's doing.
Basil, thanks so much. Excellent explanation, and I'm totally agree, and I'm going to ride it out. Thanks so much. Happy Thanksgiving.
And the same to you. Thank you for calling. Let's go to Paul in Boston. Hi, Paul. How are you?
Hey, how you doing? I just wanted to wish you a happy Thanksgiving. And then before I get to my stock, I wanted to ask you, are you coming up to the Investors Business Group at all again in Boston?
I probably will be. I usually do it every couple of months, a few months or so. I'm planning to be able to make some time free to be able to do it again. Often I come in December, so probably I'll try to get there in December, and hope to see you there if I come.
Yeah, that's a great group. You add a lot when you show up.
Yeah, thank you. So
the stock I wanted to ask you about was KKD.
So now, tell me, there was a news-related spike, right?
Well, I know that they've been streamlining the business, and they closed down some stores, and I don't know if it's. I believe it's a turnaround.
Well, yeah, I've looked at this a number of times, and every time I look at it and I say, what is happening here? Because, folks, if any of you were around when it became where it came public, you remember this was the story of the day. It was just, I mean, hysteria. It was an unbelievable thing, and that was back in, if I can find it here. I don't have it. Yes, I do. That was back in 2007, December of 2000. That was the 3rd of December, and it soared quickly. It came out at about, this is, KKK is Krispy Kreme donuts, and it was coming up to the northeast, and a whole bunch of things were going on. And so it comes out at, was that when it was, they said it would come to the northeast? Anyway, comes out at 257. No, I don't remember that. Maybe this been split or something like that. Anyway, it comes out then, and it goes all the way from 257, spikes up to 419, drops right down to 223, and then has a spectacular move. I remember different prices, and I don't have the chart, the original chart. 565 back in June of 2008, and then what does it do? It takes a little bit of a dive. It's more like a slalom because it keeps going down and up and down and up, and lower lows and lower highs, till it hits 176, tries to bounce, and it doesn't give it up until it finally hits $1.01. Well, it's had a rise of 900%. No, wait, it already, 900%. So something has been going on with the stock, because I saw it recently. I thought, why have I not recommended this? Look how it's going up, and nobody even talks about it. Do you have a position at all?
Well, I asked you about it a couple months ago, and I bought a small position.
I remember it was about to test the low, and I said if it didn't break the low, or whatever that was it was looking at, you might want to nibble on it, if I remember correctly.
Yeah, so my question now is, the one thing I'm skeptical about is it's looking at a double top right now.
Yes, okay. So let's just talk about this, because, so you have a position right now. Is that correct? You still have it?
Yes, small.
Okay. Oh, it's okay. Small. A profit is a profit.
And I'm wondering, should I add more or get out of it?
Okay. Well, I'm going to ask you, does the bank complain, does your account complain when it's a profit Even though it wasn't a big profit, but it's still a profit? No. So, congratulations on holding it. Now, this is what I remember now. It's coming back to me because it was close to the 9-period moving average and a whole bunch of things. 200-period moving average in the weekly. And someone in the den, Terry, said KKD earnings a couple of days ago. Okay. Now the question is, I'm going to make the recommendation because you identified correctly that KKD is going back to $10.08, not going back. The last high was $10.08 back in the week of the 1st of July, 2011. So that one made a double bottom at 578 and then ran up and then came back down and tested again at 586. So my recommendation is this. You've got a small position. The look of the chart is so steadily. It's a stair-step move to the upside. To me, I love that kind of action. It's a difficult action to play. Now, when I talk about the Chapman wave going from peak A to B to C to D to E, here's a very good example of how difficult it is unless you get the very bottom. The pullbacks are so deep, even though it makes a single leg spike up to a new high, it then pulls back. So you would have been stopped out of this unless you either had a longer-term view or you got in right at the low, or you let it walk the 9-period moving average, which is done and gone back above right now in the monthly chart. So my recommendation is this. Let it test between where it is now, $9.45, and that $10.08 level. My suspicion is it's going to consolidate here. It might make the handle formation. And if this really is a turnaround situation, and every single thing about the chart says, so far it's been a successful turnaround. The chart is saying that. So I'm with you. I would like, in your case, to say, don't do anything right now. Why? Because, if you got in now, all of a sudden your average is different completely. And if it pops to 10.08, or it fails to make 10.08, but it suddenly dips to $8.70, suddenly you've got a position with a terrific gain, and then you've got a position with a bit of a loss. I'm going to say to you, have patience. Let's see how it pulls back. It's certainly going to pull back at some point. The area I'd be looking at is between 876 and 855. Why? Because it should pull back to that without taking out the low of 826 that was made yesterday. And then theoretically, it should start the pattern that I was just talking to Dave about. It's called, in the Chapman wave, the inside buy mode. In other words, there's a flag pattern. I'm even going to draw it in, and we'll refer back to it every once in a while. There's a flag pattern that says the pullback that occurs should come from just a slightly higher high, and I would say that it's probably not going to make the previous high yet. So that'll be like 960, 957 to 961. Then it should pull back to about 870 to 863. And then it should start a new buy mode that works its way in the 120-minute chart back towards the old high. So I'm going to say to you, have patience. Let's look at it again together next week. But if for any reason it pulls back to the $8.69-ish area, start another very small position. Why? Because you might have to start another small position, a third one, if it successfully doesn't break 826 but holds above 826 and then starts the move up. So,
can I ask you another general question on it?
Absolutely.
You said you liked the chart pattern. Would you? I'm not a short-term trader, but would you consider it a stock to short-term trade?
As a short-term trade, the trade that I'm suggesting right now, that it pulls back, are you shorting or short-term?
No, I'm not a short-term trader.
Okay.
Would you consider it a stock that you would short-term trade?
I would, and I would on this very technique that I'm talking about now. At sudden pullback at some point, maybe with the market or just by itself, towards the 867. It might have to go a little lower. It might even have to go to 853-ish, somewhere around there. And then I would start a nibble, expecting it to try to get back to the previous high. That would be a short-term trade taking between 3 days and 7 days.
Okay. Sounds like good analysis.
Well, thank you very much. Let's see how that works. Congratulations on holding. I really admire you for that, because there was a little turmoil in the market while this was actually doing quite nicely. So congratulations. And the other thing is, call me again next week to remind me, and we'll look at it again together.
Okay. Thanks.
Have a great
holiday.
Thanksgiving. Thank you very much. That was Paul in Boston. 2 Boston callers we've had. And yes, folks, I do very frequently. I give talks at the it's the spin-off group from Investors Business Daily. It's the group that is called the Boston Investors Group. They just didn't want any conflict there because I'm not an official Investors Business Daily person, and people who come to give talks there are not always. So this is just a way to not have any hassle at all. And who needs the hassle? There's no reason for it. So this is called the Boston Investors Group, and I here in the Boston area, the talks I give, the meetings are at MIT, Massachusetts Institute of Technology, over in Cambridge. So now let's do a couple of things here because we've got time. I'm going to introduce a chart to you that I don't think anybody's ever talked about. And I hope I wrote down the symbol correctly, R-Y-L-E-Y. You know, I like, oh boy, now I've got a problem. What, R-Y? You got to write these things clearly, mister. R-Y-Z? Sure it's not an R-Y-Z. E-Y, I'll find this. It's coming up. No, I can't find it, but I'll do it in a moment. I'll go right to my, I'll find it, format, and I'll look it up. This stock, I think, is going to give us an incredible amount of information. Why? Because it is not. There it is. Oh, it was an RYC. So ordinary, I don't know which one they look at. I think it's the Y. Here we go. Look at this. Go to the black chart, black background chart. RYCEY. Now, this is a chart that I think is very important. It is a chart of Rolls-Royce Group PLC ADS. And now, let's see. BMW holds Rolls-Royce and Volkswagen holds the Bentley? Or is it the other way around? Because remember, there was this terrible mistake that the lawyers made when they sold the Rolls-Royce company. They thought that they were selling the Rolls-Royce and the Bentley, and they forgot about the nameplates, and it landed up that they only owned one. I think it was VW. Was it BMW? One of them. So if you're looking at Rolls-Royce, look how it's walking the 9-period exponential moving average. This, of course, is a car that when you go to the auto show, you'll see it on sale. On sale, I wouldn't call it on sale. You'll see it being sold for $495,000. I remember being at the show this year in January here in the Boston area, and I was standing next to a guy, and he's looking at the car, and he said, "What is the price? What is the price?" I said, $495. $495? He said, $1,000? I said, yeah. I said, yes. But if you take it right now, I'll give it to you for $450. He just didn't take it. Anyway. So it goes from $17.31 back on March 2009, and it's literally, look at this beautiful technique. Look at this technique here, going back from the low of March of 2003. It literally walked the 9-period moving average. One little after peak F top in the ChapmanWave in April of 2005, it pulled back once, just a tad under the white line. That's the 9-period moving average. Constantly went to a peak F, then a peak D, turns around, makes that right shoulder failure pattern. You remember, this is the one that you saw in the 1987 crash, that rally that after the top at 27, 25 or whatever it was, pulled back and it ran up and went to a 0%, exact 0% unchanged close. That was a signal for me that it was a sell signal again. And then it pulled back. Well, that's the same thing that happened with this Rolls-Royce. It made that right shoulder failure. Now the 9-period moving average becomes resistance, and then it walks the line, and it's still above the line. Made an all-time high last month. I'll refer this and put it into the package of what we're looking at when we get back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. And just in case I run out of time, there's a lot to do here. I've got 2 requests that I'm going to go through. Folks, have a wonderful Thanksgiving. And I'll see you back here on Monday because we have Friday off here at TFNN. Don't forget, please go to the front page. Check out this webinar, the 2-day webinar that I have December the 6th and 7th. It's an all-day webinar, Tuesday, Thursday, all day, and then we discuss what are potential trades for Friday based on the work that you've done. You get a CD for free. You get a webinar for free. This is a $49 CD. The webinar is free. Just thrown in. There's a discount. I love teaching. It's just, I find it exhilarating. It just, the more you teach, the more you learn. That's the way it is. So, please consider that, and of course my opening call, you can check it out. Now, what I want you to do is this. A question on Baidu. Don't touch Baidu. It has gone below the 200-period exponential moving average in the weekly chart. The monthly looks terrible. It's the dreaded H pattern that's failed. But more importantly, if you want it as a trade, you have to hold on. You have to see how it's got the rectangle formation. It's gone out of it to the downside. It could very well have a rally from 9165 BIDU to the upper side which is the 95.40 area. The risk is very strong. This chart looks like there's some news that's going to come out at some point and just knock it down to the 70s at some point. I'd be very careful. If you want it as a trade, I would trade it almost intraday. Get your profit. You use your 120-minute chart. Even that's not showing anything yet. I would stay away from Baidu. Next thing is, I had a question on NGD. NGD is New Gold Inc. I used to have this all the gold stocks notated. This is the monthly chart says be careful. It's made a peak D chart. It's made two peak Ds. This is the instant restart, that technique that I teach. That with the 3 bars you make a new high after D. Certain requisites are very important to uphold, and it did that. Oops, the wrong color. And it went from D, it went to brand new ABCD, and it went all the way to 14.15. NGD is trading at $10.13. The monthly chart says be careful. Yeah, it could stay in a trading range, but the technicals are really poor. This thing looks like it wants to go back down to the $8 area, and quite soon. But on the weekly, it says no. The candle that you looked at from last week says trading band. So that says, okay, trading band with a bias to the downside. Let's see what it can do on the upside. Well, the upside had a left side, right side price time match. It broke down. It's gone back up above. I would say this. If you're looking to trade this, if you want to, I wouldn't touch it right now. But if you want to take a position at $10.13, I would put a stop at $9.76 underneath yesterday's low. Why? Because if it breaks that, it'll test the doji low or down to 946. That's a big percentage difference. It might not sound much in points, but for a low price stock, the most important thing, if the technicals say that it should have rallied much more, what's really important about this stock is if you do nibble on it, and if the moment it breaks above 1024, that's not very far away. It's just 11 cents. But if it does that in the next 2 days, immediately I would have put a stop underneath today's low. Then what you've got is a much better pattern that says, great, now I can try to test the 1069 area of the 200-period moving average. This is a stock I would not marry. I'd just take it out for a date. All right? Because it's got all the signs say that area in the high 10s to the low 11s is going to be tremendous resistance. That's the way I'm looking at it right now. So, okay, now we've got a couple of moments left. I needed to do one thing. I said that I'd follow up on the volatility index, VIX. Now, I've got the technique that I developed called the ChapmanWave trend gauge. That trend gauge gave you the sharp buy for the Monday, and it gave you the whiplash down move and recovery yesterday. Today it's just neutral. I'm looking at the volatility index, and I'm absolutely certain this is getting close to an area where it could bounce. So I'm watching it real closely, but so far, under 1630 is really good news. Thanks for being here. Have a wonderful weekend. Have a great Thanksgiving. And Larry Pasavento's coming up.